Okay, hi. Today we want to talk about issuing stock. So why would a company want to issue stock? A company may choose to issue stock because they want cash or capital. In other words, they want to expand their business or they have another need for cash, and so what they do is they can issue stock, which gives away ownership to the investors, and in exchange for that ownership they receive cash that they don't have to repay. So let's talk about how to do this. We're going to make a journal entry for it so that we can show that we got cash and that we gave up some of our ownership. This is called paid in capital because this is the type of capital that we got from our investors. So we're going to have some new stock, some new accounts. Let's look at the first one. It's called common stock. All right. This is a capital account, and all capital accounts have a credit balance. And the way that we're going to calculate this is that you're going to be given the number of shares that you issue, and you're going to multiply that number of shares by par value. So right here we're just going to note that it's going to be the number of shares times par. And we'll talk about what to do with that. All right, for preferred stock, this is simply another class of stock, so it's also capital, still has a credit balance, and we're still going to do it the exact same way. That is the number of shares times par. So let's look at this account. It's called paid in capital in excess of par. And it is also a capital account. It also has a credit balance. And it is going to be calculated by whatever amount of cash you got that exceeded the number of shares times par. So, in other words, if you got more money than this percent times par, the rest of it's going to go to paid in capital in excess of par, because it is the amount of paid in capital that you received that was in excess of that par value. Let's look and see how it works when we actually journalize it. So this is some given information that we'll refer to, and here's the first one. March 1, we issued 220,000 shares of common stock at par for cash. All right, so the number of shares that we're issuing is 220,000. This is common stock, and the par value and the amount that we got for cash is the same because it says that we issued at par, which means there's going to be no difference, which means we don't have to worry about this last account right here. All right, so if we get cash, cash goes up. We increase assets with the debit. So cash is going to be debited for $220,000 times the par value. So what's the par value of our common stock? It's $10. So we're going to say 220,000 shares times 10. And the par value and the amount of cash that we got is the same here. And so we're going to credit common stock for that. All right, that's all we have to do for that one because we did not receive more money than what the par value was because it was received at par. So those two equaled. Okay, let's look at this one right here. So instead of getting cash for this one, we're going to be getting different assets. We're going to get land, buildings, and equipment. But it works the same. The only difference is that instead of debiting cash, we're going to debit these assets, and then we're going to credit our stock. So on March the 31st, that will be our date, we received land, we received buildings, and we received equipment. And we used the fair market value, and that was $150,000, $560,000, and $165,000 respectively. And we issued 70,000 shares of common stock. So look here and see, common stock, the way that we calculate it is the number of shares that we issued times par. So let's go ahead and make a credit to common stock, and let's do that for the number of shares that we issued, which is 70,000. Times the par value of our common stock. We need to read through here and find our par value of our common stock, which is $10. So that equals $700,000. Now, our balancing entry is going to be the excess, so the paid in capital in excess of par. So, my land, buildings, and equipment equaled $150,000 plus $560,000 plus $165,000, right? That's how much those equal. That equals $875,000. So that's the total amount that I got, right? I received assets, right? The par value is $700,000. So that means that my amount in excess of par, the amount over par, is equal to $175,000. Alright, and you'll see us write that like that. Paid in capital in excess of par. Just another way of saying it. So if we make a credit for $175,000 to paid in capital in excess of par, that should balance us. Alright, let's add these numbers. We get $875 over here. Let's add these numbers. We get $875,000 over here. So that means that we are in balance. So that's how you issue common stock for an amount over par. And in this case, instead of getting cash, we got these three assets. Alright, let's look at the last example. Issued 18,000 shares of preferred stock at $110 for cash. Alright, so let's say that my date is March 31st. And in this case, we're getting cash. So how much cash are we getting? We issued 18,000 shares at $110 each. So we're going to say 18,000 times 110. That's how much cash we got. Now, we will look to see how we calculate preferred stock, and it will always be number of shares times par. So, we issued 18,000 shares, and we look up here and find that our par value is 100. So, you're going to say preferred stock as a credit balance, and you will say 18,000 shares times $100 par, and that's how much we'll put the preferred stock at. Now we can see that we got more cash than what the par value is, so that excess goes to paid in capital in excess of par, and the difference can just be subtraction, 180,000. I always make sure that my debits equal, so this equals 1,980,000, this equals 1,980,000, so I'm in balance. So this is how you'll do issuance of stock. There is something called no par common stock, and if you have no par common stock, then you just don't use par. So it'll just look like this, cash and no par common stock, and you wouldn't have paid in capital in excess of par because there is no par. And you'll see that when you're working through your problems as well. Let me know if you have any questions. Thanks.